Hi, welcome to forexbiz.com. This is the second part of the video series about forex trading tip and how to earn money in forex trading. This second part deals with why most traders lose in forex trading. In the first part, we have seen the results of forex trading using this tip and some of the forex trading techniques. And even though we have all these forex trading techniques, most of the traders lose in forex trading. So the second part deals with why most traders lose in forex trading. Okay, so why most traders fail in forex trading? In my analysis, the reason for most of the people losing in forex trading are these are the reasons why most people fail in forex trading. The first one is greediness, and the second one is not following the money management, and third one is entering trades in a large amounts. That means around 20% of your balance or something like that, and entering only a few trades or trading only a few currency pairs. So these are all the reasons why most people fail in forex trading. And moreover, all these above reasons, they are related to each other. That means all the points that I mentioned here, they are related to each other. I will explain you how they are related to each other. First one is let's say let's take the case of beginners. Beginners in forex trading, when they do one or two trades, they see the money inflow with the first few trades. That means with one or two trades, they start trading with the one lot with an amount of $5,000 in their account, and for the first one or two trades, they may get around 50 pips or 100 pips, and they will see $1,000 or $2,000 profit in their account. So when they see that kind of money inflow, they start trading with more lots. That means they increase the number of lots, means they don't follow the money management. So this is where the greediness part plays the role. When the trader enters a trade with maximum number of lots, and when he or she sees his trade going in reverse direction, he or she won't close the trade and loses all the profit made in just one trade. This is what happens to most of the traders, not only for beginners but also most of the advanced traders, who have an experience of around 5 years or 6 years. This happens to them. That means they see one or two trades, winning trades in the beginning, and they trade with more and more amount, and when they trade with more and more amount, when they lose one trade, they lose all the profit they make in the previous trades. Okay, so that's where the greediness plays the role. When they see the first one or two trades getting money, and they don't follow the money management. That means they increase the number of lots, or the amount of money they trade, which obviously means that they don't follow the money management, which again means that because they enter trades in large amounts after seeing one or two trades winning, and because of that, since they enter large amounts, or a lot of lots, that means higher number of lots, they can enter only a few trades. That means they are able to do only they are able to trade only a few currency pairs. That means because of the margin requirements, they cannot enter more trades, and so even if they have any other opportunity like they see, they cannot enter those trades, they cannot take those trades, because they already entered with large amounts, or a lot of number of lots, so they cannot take you know they cannot take those opportunities for the other currency pairs. So this way, these are all related to each other. Okay, because of trading in large amounts or large number of lots, they can't enter any other trades even though they see a good opportunity because of the margin limits. Let's say like you have 5,000. I'll show you the example. How it works, and so they can trade only a few currency pairs or only a few trades at a time, like one or two trades or maximum three trades, because they enter they enter the trades with a lot of amount. This is one of the example. Let's say the account balance is like $5,000 and the leverage is 1:100, and trading lots is one lot per trade. That means one lot per trade. Since let's say the currency pair you're trading is sorry, this is not paid, this is currency pair. The currency pair you are trading is euro US dollar, where each pip value is $10. That means let's say like you gain like 100 pips. That means the profit is $1,000, and let's say like if you lose 100 pips, the loss is $1,000. That means here you have $5,000, but you are trading with one lot per trade, which is one lot means $1,000 you are trading, which is 20th of the amount of your balance. You are trading with $1,000. That means you are trading one lot per trade means $1,000. That means which is 20th amount, 1/20th of the balance you are trading with. And if you lose 1,000 pips, you lose not 1,000 pips. If you lose 100 pips, you lose $1,000. So what is the mistake here? Let's say like you trade with one lot. If you gain 100 pips, that is well and good. But what if you lose 100 pips? That means you are losing $1,000. Your balance will become $4,000. This is not $5,000, but your balance will become $4,000. So to earn the $1,000 back, normally what most of the traders do is they trade more. They trade with the same kind of amount, or they trade with more number of lots. That's where they lose more and more until they reach their margin requirements. That means sometimes they trade with one lot, but when they see that their trade is going in a reverse direction, they don't close the trade because they don't want to lose the money. They don't close the trade, so they let it as it is, and they meet their their margin, and they get a margin call. I think you know what is a margin call. It is normally every broker requires some minimum amount of money to be maintained, so that they want that don't go in a negative balance, and they don't want that actually, because again, if the trades go in a negative, if the amount goes in a negative balance, they have to ask you back, and you have to pay the amount back. So normally it's every broker, they have some margin requirements, for every $1,000 you are trading, you have to have a margin of $1,000 in your account, something like that. So if you trade with one lot, that means you should have around $1,000 margin. So if you trade with more number of lots, you can enter only a few trades, not many trades, one or two trades at most. So this is what happens when you trade with more number of lots. So what is the solution for this? Follow a strict money management rule. I think most of the traders know what money management is. Money management is knowing how much you can risk in forex trading, how much you can put a limit on the money that you can lose. So the most of the traders this 2% money management rule is one of the most preferred money management rule. That means only risk 2%, only trade with 2% of the balance you have. That means if you have $5,000 in your account, that means 2% is $100. That means you trade with only $100 each time. But you may think that $100 means if you enter the forex market with $100, you may think that you may not be able to make good money. But I'll show you my trading results. I have been practicing this. I have been trading with only 2%. but the results are very good. And let me show you the trading results. Okay. Okay, these are the trading results. You can see, these are all the profitable trades. See, I didn't get even one single trade lost. I used many techniques to enter these trades, not just one technique. But the winning rule is the money management I am using. See, here I am using only zero point 0.1 lot of 5,000 dollars balance. $5,000 balance is 1 lot means $1,000, so zero point 0.1 lot is $100. I'm using $100. I'm trading, each time. You can see, like, I sold this one. I sold the currency per euro, euro Canadian dollar, and I bought Australian dollar, Japan yen, and I bought New Zealand dollar, Japan yen. So like this, and you can see the profits here. So all of these, they are ended up, they have ended up in profits. And see, you can see this is the graph where the profits have increased from $5,000 to balance, like, $6,532. This all happened in a span of, like, 6 trading days. I started it on August 9th 2013, and the last trade is August 16th 2013. So the total balance has grown up to, like, $6,532 in a span of 6 trading days. You can see here the gross profit is 15,051, around, sorry, 1500, and around 1550 uh, $2 total net profit. And absolute drawdown is 0, maximal drawdown is 0. And the total trades I made are, like, 47. So in a span of, like, 6 business days, I made 47 total trades. So you can see, I made around 8 trades per day. Since I am entering with 2% money, I'm using 2% money management rule. I'm able to trade more number of currency pairs. So sorry. Okay, so these are the results I got with the 2% money management rule. So don't think that, like, trading with only $100, you may not be able to make much money. But if you really practice it, definitely you can make a very good amount of money. So those are the trading results. And I will show you, like, how to use the forex trading tip, which is the 2% money management rule. And the forex trading tip. And also I will explain you more about this in the third part of the video series. And also I will also show you, like, how to use it for maximum benefit. That means, normally, even though most of the traders know this money management rule of, like, 2% money management rule, they don't know how to use it. So I'll show you how to use it and how to follow that one, and what to do with the 2% money management rule. And I'll show you clearly, like, in the next series. So thank you very much for viewing this, the second part of the video. And you can, if you miss, like, the first part, or any of the other parts, you can definitely go to my channel, YouTube channel, which is Forex Biz. Just go to YouTube and search for Forex Biz channel, and you can see all of the video series here, and you can check all the videos there. So once again, thank you very much for viewing this. And also visit my site forexbase.com, where you can find a lot of things about forex trading. Thank you very much.